Welcome to another video with Invest with the Doctor. My name is Dr. Haider. I'm an accident emergency doctor during the day, and during the night, I am an investor and a trader. In today's video, I'm going to be talking about exchange traded funds, ETFs. I'm going to be talking about the ETFs that I like, why I like them. Um, this is going to be a series of videos. I'm going to be making more videos hopefully this week, and I'm going to be talking about other various ETFs which I think are interesting and might be worth investing into. So an ETF is an exchange traded fund. It's like a basket of investments that trades on the stock market like a share. Most ETFs track an index sector or theme. For example, S&P 500, technology, emerging markets. But there are single commodity and single stock ETFs as well, which are more focused and are higher risk. Now, single commodity ETFs. These ETFs give exposure to just one raw material or commodity instead of a basket. Um, instead of a basket, so they track the spot price or futures contracts of a commodity. For example, gold, silver. So GLD tracks the price of gold. SLV tracks the price of silver. USO tracks crude oil, etc. Then they've got, these are all the tickers: GLD, SLV, USO. CORN tracks corn. SOYB is soybeans. WEAT is wheat. Investors use these commodity exposure without having to buy future contracts or physically hold gold bars or oil barrels, etc. So instead of buying gold, you could just invest in GLD, which is for gold. Or it's like buying gold or investing in gold, where you don't want to hold the physical gold itself. SLV would be for silver, where you don't want to buy the silver coin or bullion, etc., but you want to have the price appreciation of silver, as I explained in my previous videos. Likewise, there are single stock ETFs as well. Now, we're not talking about commodities here. We're talking about single stock ETFs. This is a much newer thing, and I think it's a bit controversial as well. Because these single stock ETFs, they give a leverage or inverse exposure to just one stock itself. Um, um, so um, I mean, these are uh, um, sort of ETFs where you are sort of leveraging the price of the initial stocks itself. So, for example, you've got Tesla, TSLA, and there is a single stock TSLL, which is 1.5 long Tesla. Okay. Likewise, there is TSLQ, which is inverse of the Tesla stock. Likewise, there is one for Apple. There is MSFU, which is a leverage play on Microsoft. MSFD is one as well. These are mainly used for short-term trading and not long-term investing, because they are leveraged and they magnify daily gains or losses themselves. um, so Regular ETFs diversify many across many stocks and commodities, and single commodity ETFs are just one commodity itself. Single stock ETFs track or magnify the movement of one company's stock itself. Now, let's say if you're talking about a single commodity ETF, it could be, for example, let's say we are talking about gold, GLD. So the ticker would be GLD or IAU. They track the price of gold. Likewise, for silver is SLV, It tracks the price of silver, and you can keep these long term. Then there, I mean, if you're talking about just commodity, you've got platinum. PPLT tracks the price of platinum. So if you feel platinum is going to go up, you can invest in PPLT. Palladium's is PALL. It tracks the price of palladium. Then you've got USO, which is crude oil. Natural gas is UNG, and like I mentioned, corn, CORN, COYB is corn, and soybean, etc. Um, Now, the ones to avoid, I feel, are these leveraged ETFs or single stock ETFs are the ones that I think everybody should avoid unless they know what they're doing. They can be for short term. For example, if you feel okay, the price of let's say um, Tesla, you feel um, is going to go up. You could try for a day or for a week, invest in TSLL, which is 1.5 long Tesla itself. And if you feel that the price is going to go down, TSLQ would be an option. But I think these are more for traders as opposed to as opposed to investors. Likewise, you've got for Apple, you've got them for Nvidia. So if, for example, there is a bullish news that comes out and you feel that the Nvidia stock is going to go up, so instead of just investing in Nvidia, you could invest in NVDL, which is 1.5 long Nvidia. And likewise, if you feel that there is some bad news from Nvidia, there could be and you feel that the stock is going to go down, you can invest in NVDQ, which is sort of one sort of 1x minus Nvidia. So that means that you feel that the stock is going to go down. Likewise, you've got for Microsoft as well, but I usually don't recommend these. And I mean, so some people hold these for a few hours, some people hold them for a few days, and some for a few weeks. And they're quite news dependent. Otherwise, for long term investors, this is not a good idea. And I'm just talking about the leverage play or single stock ETFs. Single stock commodity is a bit different, and you can keep them long term. And for some, again, even for commodities like gold and silver, may not be a good idea. So single stocks are designed for short term. Single stock ETFs are designed for short term trading and not long term investing, because leverage resets daily and compounding can distort the returns. Because these the way these ETFs are designed, every day they're going to be reset, so you're not going to get benefit from this. And I have been burned by this myself, where I bought into MicroStrategy MSTF stock, leveraged play, and even though the price of MicroStrategy was going up, this leverage play was not over a week, and that was because they are being sort of reset every single day, so that distorts the price, and the price of the leverage play was not going up. So again, for long term, I think gold is a good idea. GLD or IAU you can invest in as a long term hedge or store of value. This is a good idea. Silver, same thing. So if you see that the price of silver is going up, you can invest in SLV. Again, for good long term, it makes sense. Platinum also, again, if you feel that the price of platinum is going up, PPLT, um, it's okay. Palladium, again, if you feel that the price of palladium is going to go up, PALL, and again, long term, it's okay. You can keep it. Now, the ones that I would not recommend are crude oil, and the ticker for it is USO. This is for short term only, I think. Natural gas, UNG, again, short term. Corn is okay, soybean is okay, wheat is okay. I've given you tickers before. So crude oil and natural gas. Again, why? Because these are very volatile stocks. With the geopolitics, with the oil going up and coming down on a daily basis, it doesn't make sense to be in the crude oil ETF. So USO wouldn't make sense, and natural gas UNG, again, I don't recommend this because it's just way too volatile. So I would avoid these ETFs. Now, then there are thematic ETFs. These ETFs invest in a basket of stocks that benefit from a specific long-term trend or idea or theme. And these are the ones that I'm going to make more videos on in the future. And hopefully this week I'm going to be talking about these thematic ETFs. So these are usually ETFs like artificial intelligence. So there is a theme based around the artificial intelligence itself, clean energy, aging population, cybersecurity, space exploration, etc. So instead of following a traditional index like S&P 500 or a sector like utilities, they track custom built indexed around the theme itself. So example would be BOTZ. This is Global X Robotics and Artificial Intelligence ETF. ARKK is ARC Innovation ETF. This is disruptive tech. HACK, this is cybersecurity hack. Likewise, you've got iShares Clean Energy, ICLN. TAN is quite popular. It's an Invesco Solar ETF. URA is Global X Uranium ETF. So if you're talking about uranium or uranium mining ETF, URA makes a lot of sense. UFO is Space Exploration ETF. Now, today in this video, I know it's become a long video, but I just want to take a few more minutes to talk about my favorite ETFs and why I like them. So I'm going to be talking about iShares Gold, um, which tracks the price of gold. So the ticker for it is IAU, or in UK is SGLN. Another popular one is SPDR Gold, and the ticker for it is GLD. So if you are in US, IAU and GLD would be the ticker, and if you are in the UK, SGLN would be the ticker for iShares Gold. Likewise, for iShares Silver, SLV is the ticker internationally, or if you're in the US, if you're UK based, is SSLN, which is iShares Silver. And I'm also going to be talking about Venek Gold Miners, or GDX. I've talked in my previous video about GDX itself, and I'll mention it again here. And Venek Junior Gold Miners, or GDXJ, which are gold miners ETFs. And then you've got the Global X Miners, SILJ. Now, so let me show you the this is the price of gold itself. So you can see at the time of making this video, gold is going for a price of around 3,758 US dollars. So instead of sort of directly investing in gold, you can just invest in the iShares gold itself, and it tracks the price of gold itself. So you can see gold has come out of this basing pattern itself, and it's going up. This is the weekly chart for gold itself, and you can see the price is going up, coming out of this basing pattern, and it's got my sort of favorite long-term pattern, which is the 21 week above the 50 week, which is above the 200. The blue, red, green, and they're all upsloping. So instead of investing in gold, because commodities, it's not very easy to invest in them, and you need to have a lot of money, you could just invest in this stock here, IAU, which is the iShares Gold Trust, IAU. Uh, that's the ticker. Again, we are talking about the weekly chart, and you can see how quick, how much it follows the price of gold as well. So it looks pretty similar to previous chart. Again, basing pattern, and it's coming out of this basing pattern upwards. The price for iShares Gold Trust at the time of making this video is 70.99 US dollars, so nearly 80 US dollars. So instead of investing in gold, you can invest in this ticker IAU, which would track the price of gold itself. Likewise, let's say this is the price of silver itself at the time of making this video. So silver is 46 US dollars. We're talking about silver in the weekly chart, and look at this super chart. Very, very parabolic looking chart. If you've seen any of my previous videos, I've been talking about silver for quite some time. I've talked about silver miners, why you should be getting into them, and I in my previous video I mentioned the price of silver, which I think is very likely to reach around $50. It might not in the short term, it might not reach exactly $50, might be 49, and there might be a pullback, but around that much. So look at this chart carefully. Now I'm going to show you the chart. Instead of investing in silver, you could invest in silver miners. So SLV, again, similar chart, but this is the ETF SLV. iShares Silver Trust. At the time of making this video, the price is $41.86. Again, we are talking about the weekly chart of SLV. So I've mentioned iShares Gold, iShares Silver. Another ETF that I like is this one here called VanEck Gold Miners ETF, or the ticker for it is GDX. Both UK and abroad, or if you're in US, the ticker for it is the same, GDX. Again, GDX, I'm talking about the weekly chart itself. Look at the chart, amazing. So it's going up like mad. So if you see the price of gold going up, you can either invest in iShares Gold, or you can invest in GDX. And these gold miners do very well when gold is going up. So you don't need me to tell you that you should be getting into GDX. When you hear or see that the price of gold is going up, GDX is a no-brainer. Then another one that I like is GDXJ. These are the VanEck Junior Gold Miners. GDXJ is the ticker. Again, we're talking about the weekly chart itself. Look at this parabolic move again. Okay, pretty similar to my previous setup that I've always mentioned that I like. 21 week over the 50 week, which is over the 200. So blue over the red over the green, and they're upsloping, which is absolutely fantastic. So GDX or GDXJ you can invest into. When gold goes up, what follows is silver. So I talked about silver itself, or investing in iShares Silver. You can just invest in the ETF SIL, Global X Silver Miners. Ticker for it is SIL. Again, this is the weekly chart for SIL, and again, crazy parabolic move. Silver sort of tracks or closely follows, not tracks, tracks wouldn't be the right word, but it closely follows the price of gold. If gold goes up, normally silver follows as well. So Global X Silver Miners, ticker SIL, is another stock that I would recommend. The ticker for it is SIL, and at the time of making this video, the price is 70 US dollars. So in this video, I've talked about these ETFs, which is iShares Gold, ticker for it is IAU, or GLD if you are in the US. If you're in UK, the ticker it is SGLN. Then you've got iShares Silver for the people in US or abroad. For UK is SSLN. And the other ETFs that I've mentioned that I like are um, VanEck Gold Miners GDX, uh, VanEck Junior Gold Miners GDXJ, Global X Silver Miners SILJ. So these are my favorite. These are the few of the commodity ETFs that are going crazy because gold and silver is going up. These ETFs are going up likewise as well. So if you see that the price of gold is going up, automatically you can quite easily just look into if the gold is going up, the gold miners would make sense, just GDX, GDXJ, or you could just invest in the metal itself, which is iShares Gold. um, like I said, silver follows gold, so you could either invest in the iShares Silver, or you can invest in Global X Silver Miners, which are mining stocks for silver, which I've mentioned before in my previous videos. I hope that you found this video useful. In my next video, probably tomorrow, not tomorrow, day after tomorrow, I'm going to be talking about other themes or thematic ETFs, which I think are just as useful to invest into. I hope you found this video useful. I know it's a little bit long, but I wanted to get the basics through. And in the next videos, I'm going to be talking about more thematic ETFs that I feel are worth investing into. Um, if you found this video useful, please like and subscribe. And as always, thanks for watching.